Hey everyone, today I'm diving into the balance sheet secret that every business owner should know, non-current assets. So, what exactly are non-current assets? Simply put, these are long-term investments your business holds for over a year. Think property, plant, equipment, things you don't plan to sell anytime soon. They're crucial because they represent stability and long-term growth for your business. Now let's break it down. First, we have tangible assets. These are physical items like machinery, buildings, and land. They're the backbone of your production and operations. Keeping them well maintained boosts productivity and reduces unexpected expenses. Next up, intangible assets. This includes goodwill, patents, and trademarks. They might not be visible, but they pack a punch in terms of value. Imagine having a unique patent. It's a competitive edge that can drive your revenue up. And let's not forget investments. Long-term investments in stocks or bonds can diversify your income streams and offer financial security. It's like having a safety net for your business. So, what's more crucial among these? Honestly, it depends on your business goals. If you're expanding, tangible assets might be your focus. If you're innovating, intangibles like patents are gold. And if you want to stabilize your finances, long-term investments are key. Understanding your non-current assets allows you to make smarter decisions and plan for the future. So, take a closer look at your balance sheet and see how these assets can work for you. That's it for today. If you found this helpful, hit that like button and subscribe for more business insights. Thanks for watching.